Stephen Meintjes. Now, he's a fairly frequent visitor to our studios in the normal commentaries on the markets, but he's got a new book out, and it focuses on tax practices and what should replace them in South Africa. Quite controversial and revolutionary stuff. And now he joins us in the studio to talk about some of the key messages and themes in the book. Morning, Stephen.
Yeah,
Good
morning,
to be
David.
talking to you, but not on the usual commentary on the markets. You're taking a bigger, longer view. And your book, it's talking about tax, it's talking about rent, but rent here is a much broader term than simply paying the landlord for your flat at the end of the month.
Yes.
I know it's difficult. Really what we're flagging for people is what this kind of book it is. But what's the heart of it with the tax versus rent thing? Because if the government were to adopt this, we'd have a completely different economy.
Well, absolutely, and it addresses both the land question and the economic growth and jobs question. But, and I mean, basically the idea is to replace our rather Eurocentric tax system with land rentals instead. As you said, it relates to a phenomenon called economic rent, which is simply the difference between what you can produce on the least productive piece of land in use and all others using the same inputs of labor and capital.
Can you give an example to illustrate that?
Well, if you can take any particular form of economic activity, like you're a newspaper vendor on a busy street in Sandton, and you're a newspaper vendor in Grafrenet. No matter how skillful you are dodging in and out of the cars and selling your papers, you're going to sell more here in Sandton. And the same goes for all the shops. You know, your Woolies branches here in Sandton compared to Grafrenet or Pofadder. And that you can apply that to anything you like. Mining. If you're shallow and rich grade compared to the deep low grade mines, you know, you're going to coin it.
Yeah. All right, so let's take that newspaper example. So now that newspaper man sells the newspapers to people. He gets an income. He then has to pay tax on that income. Or his principal back at the office has to pay tax. What are you saying would change?
Well, what would really change, in theory, right now, as you say, he should be paying income tax if he earned enough, but he's probably below the threshold.
Well, let's say he does earn enough.
Okay, so he wouldn't pay any income tax. He would simply pay a rental for using that particular site, having the right to use that particular site to sell his newspapers. It's not a very good example because...
Let's take the mine then. How would the mine work?
Well, we've got a special proposal with mining as a proxy for land rentals, and that is rolling out the old gold mines tax formula, which was very successful over many, many years. And in terms of that formula, there's a tax tunnel. Marginal mines earning with operating profit of less than 10% pay no company tax at all. And mines with margins of, let's say, over 50% or so would be paying over 40% company tax. But
that's still tax. It's just what you're saying is a very good way of calculating it. How does it differ again there from rent? Okay,
well, the way it differs is that it's a proxy for collecting. You see, they have what's called locational advantage, the richer mines, and take a step back. The whole thing about land and land values is that it's actually due to the state, whether we like it or not, for the simple reason that security of tenure allows us to enjoy the man-made and natural advantages of our land. So if you've got a great mining site that's, let's say, shallow and high grade, that is a huge advantage. And we had this classic phenomenon back in, I think it was December 2011, when Kumba was able to pay a fantastic bonus to something like 5,000 or 6,000 workers. And meanwhile, a few months later, back at Marikana, the platinum mines were battling. They were marginal. They had become marginal, and they couldn't afford that. And the platinum miners couldn't understand how their brothers out in the Northern Cape were getting these fantastic bonuses, and they weren't. And through no fault of Kumba's I mean, it was paying nice bonuses and very good for them. But under this system, you simply the state collects the locational advantage. And in other words, it doesn't tax us for working and investing. And in the case of VAT, for even surviving.
Right, so how are you going to get this system, I mean, it's a hell of a mission to get people to pay attention firstly. It's unorthodox, it's different. Do you see any traction for this, practically?
Well, absolutely. You see, one of the things that's happened in mainstream economics over the last century is the conflation of land and capital. And unfortunately, with Piketty's book, which is a magnificent tome, and it's put distribution back on the, on the forefront of attention, but he conflates land with capital. And he says so, he does that because there isn't the data on raw land values for him to distinguish between land values and the improvements to land and other forms of capital. So his data is obviously a little bit mixed up.
Have you run this past colleagues in the economics world, in government? Tested out these ideas?
Yes, we've sent, the manuscript's been sent to Judge Dennis Davis, and I've been sending memoranda to the Treasury for years, and I think we sent them a copy of this.
What response from Treasury? We acknowledge receipt of your letter.
That's about it, yes, yes. We actually argued against the windfall tax for Sasol some years ago on the basis that it would be seen as an ad hoc measure. And our idea was that you should rather have it as part of an overall change, not just a, money.
How would your theories address the issue of redistribution of land? There's a lot of controversy about that. People they argue that there are people who were disadvantaged in the past, who had land taken away, but who don't necessarily want that land back. So a lot of the land redistribution is it's firing at a target that's moved already.
Yes.
So, but it's a very emotional issue.
Well, the short answer to that is that South Africa, according to the preamble of our constitution, belongs to all the people who live in it, all 122 million hectares and the 52 million of us. That's about 2 and a bit hectares. I'll have my hectare right here, thanks very much, in the middle of Sandton. You can have yours out in Pofada. So we obviously can't physically divide the land up. But the way to ensure that every person in this country benefits from his or her land is the knowledge that they, the people, are getting the rent on their land. And the beauty of the system is that it incentivizes economic activity because you're no longer penalizing people for investing and for working.
So in effect you're taxing some things but not others, whereas at the moment you're taxing a whole lot of things.
Correct. When Henry George proposed this in the 19th century in America in Progress of Poverty, which was a worldwide bestseller, he used to talk about the single tax that would replace all other taxes. Adam Smith also spoke about it, despite being regarded as the arch exponent of capitalism and with his famous canons of taxation, he actually favored rent, collection of rent. If you read him, we've got a chapter in the book dealing with that.
Well, it's, as I say, Stephen, only able to scratch the surface. Thanks to Stephen Meintjes. He is Head of Research at Imara SP Reed.